Welcome to Webinar 8. In this session, we zoom out to look at the big picture. How does the economy affect silver's value? Understanding these dynamics will help you make sense of silver's price movements and not be surprised by ups and downs. We'll discuss silver's behavior during economic booms and busts, inflationary periods, financial crises, and how its unique role as both an industrial commodity and a precious metal comes into play. By the end, you'll see how silver can sometimes act crazy compared to other assets, and how that can actually be a good thing for long-time savers who understand what's happening. Dual nature recap. Remember, silver wears two hats. It's used in industry, electronics, solar panels, etc., and it's an investment safe haven asset. This means in a strong economy with robust industrial growth, factories are humming, solar panel installations are booming. Industrial demand for silver rises, which tends to support and raise the price. In a weak economy or during financial panic, investors often run to safe havens like silver. Investment demand surges, which can also raise the price. On the flip side, in a slow economy, industrial demand might drop, pulling silver down. But if it's not a full-blown crisis, safe haven demand might not pick up the slack immediately, so silver can languish. Or, in a very optimistic boom, investors might prefer stocks over metals for a time, even while industry is good, leading to mixed effects. Let's break it down by scenario. Number 1, economic growth and booms. In good economic times, factories are using more silver for electronics, cars, solar. Jewelry demand may be up as people have more money. Silver being a commodity, its price can rise with increased consumption. We saw an example. About 14% of all the silver demand in 2023 was for solar panel manufacture, up 5% from 2014. That's a structural economic shift due to the green energy boom. So during a boom, silver can get a boost from that side. However, booms can also come with rising interest rates eventually. Central banks raise rates to cool inflation in a hot economy. High interest rates can be a headwind for silver and gold in the short term, because when you get good interest rates elsewhere, non-interest bearing assets like silver are slightly less attractive. For instance, in 2022, when interest rates rose, silver prices were somewhat subdued because some investors preferred interest-paying assets. But that's more of the short-term financial effect. Generally, a healthy growing economy that is not causing other assets to crash tends to make silver's industrial side shine, but its investment side might be quieter. People are busy making money in stocks and real estate instead. So you might see moderate price increases or stability. Silver often doesn't get huge attention until either inflation picks up or a downturn looms. Number 2, inflation and currency changes. If the economy overheats and inflation rises, like in the late 1970s or more recently in 2021-22, silver and gold often become hedges. Investors remember that precious metals hold value while currencies can lose their purchasing power. So, during high inflation, demand for silver as an inflation hedge usually increases. We have data. Over the long run, silver has indeed tracked inflation. During the Great Inflation of the 1970s, silver went from about $1.80 an ounce in the early 70s to peaking around $50 an ounce in 1980, helped by some unique events, but broadly, it skyrocketed when inflation was high. In the 2020 to 2022 inflation spike, silver and gold rose as well, though they also faced the interest rate headwind as mentioned. So, if we enter a period where paper money is being devalued, either via lots of printing or negative real interest rates, that's typically bullish for silver. Silver's price might not move in perfect tandem with monthly CPI, but over a year or two of sustained inflation, it tends to catch up strongly as people seek that protection. Number 3, recession and crises. Here's where silver's dual personality can make things interesting. Early in a recession or panic, often stock markets crash and industrial activity falls, and at the onset of a crisis, everything, including silver, can sometimes drop as investors sell assets for cash. This happened in late 2008. Silver price initially fell sharply in the immediate panic, but this is usually short-lived for precious metals. As the crisis unfolds, the central banks respond, often by cutting rates, printing money, etc. silver tends to rebound and surge. For example, after the 2008 crash, from 2009 to 2011, silver had an enormous run-up, from around $10 an ounce in 2009 to around $50 an ounce in 2011. Why? Because the reaction to the crisis: low rates, fear of inflation from money printing, loss of confidence in other assets. This drove investors heavily into metals. Safe havens spike in major geopolitical or financial crises. Silver and gold usually get a safe haven bid. We have records of events, e.g. during the COVID-induced market crisis of 2020, silver initially fell but then quickly bounced and reached multi-year highs by 2020 as stimulus kicked in. During wars or geopolitical tensions, gold is often the go-to, but silver rides along, often even more dramatically because it's a smaller market. So a given amount of money moving into silver moves the needle more. As cited earlier, investors seek silver for its safe haven quality during periods of political and economic uncertainty. Average increase in silver price was often larger than gold's in such crisis events, according to historical records. This is that volatility. Silver can overshoot in both directions. Late recession and recovery. If we're in a prolonged economic slump but no fresh crises, industrial demand might be weak. Silver could underperform gold in that scenario because the industrial drag might weigh it down. But often, recessions lead to policy responses that eventually spur inflation or recovery, which then benefits the silver. It's cyclical. Number 4, monetary policy. Interest rates, QE. As mentioned, silver tends to do well when interest rates are low or negative after inflation because holding cash yields little, so metals shine as a store of value. Conversely, when central banks hike interest rates sharply and real rates minus inflation become positive, metals face pressure. Investors can get returns in bonds or savings. However, central banks often raise rates in response to inflation, which is itself bullish for metals, so there's a push and pull. It's complex, but historically, some of silver's best runs were in low to negative real interest rate environments, e.g. 1970s and 2000s. When central banks do quantitative easing, QE, basically create money to buy assets, as seen post-2008 and 2020. It tends to weaken confidence in flat money and boost metals. Silver soared after major QE rounds. Conversely, when QE turns to tightening, QT, or when money supply contracts, it can be a headwind. Number 5, supply factors. Though less talked about, the supply side matters too. Most silver comes as a byproduct from mining other metals. If prices stay low, mines produce less. If prices jump, there's a lag, but eventually production might increase. Also, if certain large mines open or close, that can tilt the balance. For instance, there have been some years of silver supply deficit recently, demand exceeding supply, which analysts say could create upward pressure. If silver is in deficit, using more each year than is mined, drawing from above ground stocks, logically that's bullish if it persists. The Silver Institute noted a big deficit in 2022. These fundamentals play out longer term though, not day to day. Volatility and patience. Silver has a reputation. It's volatile. It can make big moves up or down. Compared to gold, it's about 1.5 to 2 times more volatile typically. This means one needs a bit of patience and thick skin. There will be times when your silver's market value drops 20% in 1 year. That can happen. Other times, it might jump 50% in a year. For example, in 2010, it jumped 80%. 2013, it dropped 35%. If you understand that these swings generally correspond with economic tides, then you won't panic. In fact, many silver savers embrace this volatility. They accumulate more when the price is down, buying cheaper ounces, knowing that over long term, silver's value tends to revert upward due to inflation and its finite supply. Silver versus gold in economy. Often they move together due to common drive. Inflation, crisis equals both up. High rates, stability equals both down. But silver can lag and lead at times. Gold to silver ratio, gold price divided by silver price, is a watched metric. Historically, it's been anywhere from 15 to 100. In crises, silver sometimes outperforms, narrowing the ratio. Like in 2011, it got to 30. In downtimes, silver underperformed, widening the ratio. In 2020, it briefly hit 120. Right now, mid-2020, it's around 80. Some view a high ratio as silver being undervalued versus gold, expecting silver to catch up. This is somewhat technical, but it underscores silver often follows gold's direction, but with more gusto. So, if one believes that gold will do well in coming economic conditions, silver might do even better percentage. Conversely, if gold's prospects are low, silver might fare worse in the short term. Notable historic economic links: the Great Depression of the 1930s. The US had silver at a fixed price part of that time, so not as telling, but generally a deflationary era, not great for metals until governments devalued currencies later. Post-World War II, a long economic expansion with moderate inflation. Gold was fixed by Bretton Woods until 1971. Silver became non-monetary, end of silver coinage by 1960s. Price was low until the 1970s. 1970s stagnation. Silver up massively, from about $1.5 million in 1970 to $50 million in January 1980, though that peak involved the Hunt brothers trying to corner the market, a unique event, but still, it got very high. 1980s to 90s, disinflation, high interest early on, strong stock markets, metals languished. Silver drifted mostly between $5 and $10 for years. 2000s, new millennium brought new tech demands, electronics, rising emerging market growth, more commodity demand, and eventually wars and deficits leading to dollar weakness. Silver rose from $5 in 2003 to $20 in 2008. 2008 crisis, plunge, then spike reaching $50 in 2011 as mentioned. 2010s, after that spike, a period of recovery, then long economic expansion without high inflation. Silver cooled off, back into a range, $15 to $25 for much of the decade. It bottomed around $13 in late 2013, when stocks were booming and inflation was low. 2020s, pandemic crash, then huge stimulus. Silver shot from $12 March 2020 in panic low to $30 by August 2020. Since then, high inflation but also high rates. Silver hovering in low $20 in 2023. The future, of course, unwritten, but many see structural demand like green tech and potential currency issues as supportive in the long run. The key lesson: don't be alarmed by volatility. Instead, understand the context and use it to your advantage. If the economy is strong and silver is in a lull, you know part of why. Less safe haven demand. That might be a good time to accumulate steadily. If the economy enters a crisis and silver shoots up, you recognize why. Flight to safety, etc. You can decide whether to hold long term or maybe take a bit of profit if it overshoots. As a long-term saver, you're not trying to trade in and trade out perfectly. By knowing these patterns helps to prevent selling in fear at the wrong times or getting overly exuberant at peaks. It reinforces that silver is a long game. You ride through cycles and maybe even capitalize on them. Buy more in busts, trim a little in manias. Wrap up thought. Silver's role in the economy is almost like a financial seismograph. It often senses and responds to monetary stability or industrial trends. By holding silver, you have an asset that can flourish in conditions that are challenging for many other assets, like high inflation or crisis. This can provide balance for your overall financial picture. Now that you appreciate how silver behaves with economies ebb and flow, in Webinar 9, Building Your Silver Savings Plan, we'll discuss how to integrate silver into your regular saving routine strategically and set goals so you steadily build wealth with confidence through all economic weather. It's time to get practical and disciplined on your silver journey. See you in the next session.